now, looking at the RTH as objectively as possible, we appear to be having a ladder down. We get under 82, we're probably coming down to the bottom of the range.
And boy, was that the understatement of the week. If we get under that 82 strong level, we're probably coming to the bottom of the range. Well, it did way more than that. We took out, 14, 15 daily lows. But before we get into Friday's price action, let's rewind a little bit to the beginning of the week and look at the best setups for the week. So on Monday night, about this time, I released the battle plan, and it is available to everyone, whether you're a member or not. Monday night, you get the battle plan for Monday night's trading and Tuesday. And on Tuesday, we're live on YouTube. And if you were with us live, you know we were looking for this long here, making it to our target, and it did a little bit more than that. So battle plan trade number one was the trade that paid from the Monday night battle plan. Tuesday night, this was battle plan trade number one. And if you got into that and you traded with us also, we got another entry and went long here. And many of the traders made 30 points on this move here and made 30 points on that move there. Absolutely beautiful. Here, note the strong level at 82. This 82 has been the key level all week long. Could once again present us short all by itself. Note the mapping sequence. So when you get the battle plan, you want to look at my mapping sequences and mimic them on your chart. And then Thursday night, this was our mapped out short. Why? Because we're looking for price to go back to the bottom of the range. And that's exactly what happened on battle plan trade number four. I was actually long at 68.11 that night, and I should have just kept my freaking entry, my runner at my entry, but instead I know I'm extremely counter, so I took my profits at the next bounce level. Hey, when I'm counter, I'm not going to pretend I'm going to hold that runner forever to be in the possible vomit that you get on Friday. When the bulls control, you have to treat shorts as what they are, scalps. Thursday night, I added this note. I said, each idea feels risky, in my humble opinion. Maybe it is just me. Sometimes you get that sixth sense feeling that something's just not feeling right. I gave this advice here. If you had a killer week so far, and traders did 30 points here, 30 points there, just crushing it, doing really well. Look to the weekend already and ensure that you go into the weekend a winner. Adjust your risk settings as needed. Had another fantastic trading day there in the group. And then Thursday night, I published the battle plan. And if you got in on battle plan trade number one, that happened in the London session. It was beautiful. You could have captured 10 points and maybe more depending on how you played it. And on that night, I also remarked, are the bulls going to give it up? The writing seems to be on the wall. We shall see. I will not prediction trade it. That is for sure. Flat is a fine position. And then this final warning, I gave this Thursday night here. If we start violently moving down, not respecting levels, step back and stand down. And those are some of the things we are going to discuss as we discuss Friday's price action. So that's how we traded this week. It was very nice. Am I going to pretend we were in that short? Heck no. We actually ended Zoom early. It was so boring. It was so boring I ended Zoom before our normal time. We did remark, it's interesting that we left this little fair value gap. That they can't fill it. We do seem to be having evidence of laddering down. And if we get under 82, expect a move back down. We also pointed out, let's go to a higher time frame chart, that this is the range going all the way across, that every time we get up here, fail. Every time up here, fail. Every time up here, bigger fail. This seemed to be the breakout. We broke out over the range, basically retesting it, making new highs. That seemed to be the breakout. And then we just failed and failed. And then so many times the bulls are going to give it up. And that's why I remarked what I did. Are the bulls going to give it up? The writing seems to be on the wall, but I can't just go short here because I have a feeling, I have a hunch. That's not how you trade successfully, in my humble opinion. So no big deal. I wasn't in that short. And what do? Let's talk about this. This is really important. So Friday was test day for traders. Did you pass? It was test day. If you had leaks, if you had holes in your boat, you sunk. What are the leaks in your boat? We're going to talk about some of them here. To me, this is the most important thing. Not what happens next, not, what's the next mapped out trade. We need to nail down Friday, and did you pass as a trader? One of the things we talk about in our group is when the bulls control, there's a great question. When can I short an uptrend? We have very specific rules on that. But one of the main ones I tell traders is you want to see a move that goes where you go, holy crap, what just happened? What was the news? Okay, that's what we're looking for when the bulls control. Holy cow, what just happened? That means things are probably changing. Okay, when you say, oh crap, what just happened? What was the news? And you're scrambling all over. The next thing you need to know is what the advice said: stand down. Close your trading platform if it's separate from your chart, and know when not to trade. All right, so on a 3-minute chart on our essentials indicator, when you start getting these red candles, these are 15-point or larger candles. Why is it red? Alert, 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 okay? We had one 3-minute candle that traversed the entire range. Are you kidding me? Holy moly. What do you do here? Exactly what the advice says. If we start violently moving down, not respecting levels, stand back and stand down. Turn off your DOM, and if you have to, literally just say, I'm done, and you walk. That was the first test. Did you realize that price action got really dangerous? And you said, I am not going to put myself in danger by trying to trade dangerous price action. If you did, you passed A+. So we got a 15-point plus candle here. Here. Look at all those 15-point candles. That's a problem. Conventional wisdom says if you are trading ATR and trying to place a proper stop loss, so at the end of the day, the ATR was 10. During the day, it got really big. Let's go and see what was the ATR about this time. And then we'll talk about the conventional wisdom. 17. Okay. Danger. The conventional wisdom is if you're going to place your stop loss using ATR, you want to use 1.5 up to 2. Okay. So if the ATR was 10, what's 1.5 times 10? You need a 15-point stop loss. If you're doing double, you need a 20-point stop loss. If it's 17, that's just a monster stop loss. Okay. Now there are ways to trade that, and you've got to drop down in time frames. You got to pick your spots exactly perfect, know exactly where you're wrong, and get out and know this is highly dangerous price action. I probably shouldn't be doing this. I should be trading just one micro, even you big ES boys, in my humble opinion. You can do whatever you want. But when this ATR gets this big, you've got to stand down. Notice how it is red, okay? That's one of the things that will change for you is that color will change. Let's go look at the overnight. What is the ATR in the overnight? It's usually 2 or 3. It was 1.8 at this time, okay? That's a normal overnight ATR. That is normal. I love trading in price action. That is 6 to 10 max. 6 to 8 is really good. So notice how it's green, okay? And then whenever you go into those really large candles like that, it's not going to be green anymore. It's telling you, hey, alert, alert. So the first alert is these are red. Second one, you see these big ATR candles. What just happened? I need to close my DOM. Price is not respecting levels. Step back, stand down. you do not need to trade. Plus, it's Friday, so Friday rules matter, don't they? And then eventually, the 4-pack catches up. Everybody's below previous day low, all below. Another warning sign of this is probably not great price action to trade. And then here at the very end of the day, this is to me the scariest part of the whole day. It dropped another 60 points in the maintenance period right before the close. That's the part that scares me the most about the price action yesterday, was that final little drop right there. That one is a scary one. So let me turn back on these notes here. So let's talk about this. So when can you short? We have rules about that in normal price action. But when you get a what just happened, don't trade. Don't trade. Did you pass that test? Did you notice the large ATR doesn't fit within your leverage metrics? As soon as that gets to 10, that means you need about a 15-point stop loss. That's why at 10, I have this go red. Alert, alert. You probably don't have the leverage metrics to handle a 15-point stop loss. You got a group of 15-point candles in a row, not just one, but boom, over and over and over. Let me slide you back over here so we can see this stuff. Those big red candles. Looks like a Christmas tree. Also, big lesson of yesterday, you should always trade with a stop. I know there were people looking to go long in here. I saw them all over Twitter, and it didn't get them in. Had they went long without a stop loss, what would this have done? Liquidation, boom, blown accounts because of one stupid tweet. One trade's going to blow your account. Always have a stop in. I am not perfect on this one. A lot of times I'll just enter and I know I'll add my stop here in a minute or something. That's really not a good practice, George. You really should put your stop in upon order placement. This was another fantastic lesson in that. In a 3-minute candle, this thing went a whopping 55 points. That hurts. That hurts bad. Okay? And then when can you counter this? Well, you know one of our rules for when can we counter when a trend is established. Yeah, we got trend to the south. When can you go long? You're really looking for a second ladder. Do you see a second ladder north in here anywhere? Do you see a second ladder? Now you can drop in time frames and find them. I took a couple longs. I'm not going to go into them, but on a lower time frame, I was using battle plan trades. I was using strong levels. I knew exactly where my stop was. And if it made 10 points, I exited immediately. So that's how I did that. Probably still, did I pass Friday? I don't know. You could say I failed because I traded it, but I also traded very small and I traded at exacting locations. But in general, as soon as you see these big candles, you go, boop, I'm done. I'm out. Come back on Monday. Monday could be just as scary. We don't really know yet. I don't even know how I draw strong levels now. I'm going to think about that tomorrow. Tonight, I wanted to talk about some of the lessons of the trading here of knowing when should I stop trading. I can teach people how to draw levels on your chart that when price gets to them, they bounce. I can teach you that pretty quickly. Teaching you to walk away from the chart and say no thank you, well, that one's on you. I can only tell you so many times you shouldn't trade this. If we start violently moving down, not respecting levels, step back and stand down. I can't remove your hand off the mouse. I can't turn off your computer for you. Those are things you have to do of knowing when not to trade. The best trader, in my opinion, for all of this is as soon as you notice this, you said, I'm out, I'm done, and I'm going to come back later. This is not meeting my trade plan. Nowhere in your trade plan does it say, when we start getting 15-point candles, that's when I start trading. I promise you that's not in your trade plan if you had one. So I hope you stayed safe. If not, check us out at MicroTrader. We would definitely try to keep everybody on the right side of price action and safe. Sometimes the right side of price action is being flat with no trade at all.